We want to talk about what's going on over. The expectations are very high for this conference call between Germany, France, and Greece coming up in about 30 minutes. And, of course, all the nations have to vote on the expansion of the bailout fund over there. Joining us right now with their thoughts, Louise Cooper is markets analyst at BGC Partners in London. And Keith McCullough is CEO of Hedgeye Risk Management and a CNBC contributor. And, Louise, we've another example today of how Europe is calling the shots here in the U.S., that misunderstanding out of Austria. We thought they were killing the EFSF vote, and they were just delaying it down the road. I mean, we have to go through this 17 times in Europe as everybody votes on that plan, right?
Yeah, it's quite exhausting watching the markets at the moment. I don't know about you, but I'm tired most of the time. I think it's quite interesting, really, where we are in Europe, because at the moment there's this massive gap between what the markets are saying and the rhetoric that you're getting from politicians. I mean, behind the curve, they're not just behind the curve, they're way behind what everyone else is saying. I mean, you can almost drive a coach and horses through the gap between markets telling you about the likelihood of Greece defaulting and what you're hearing from politicians. And I think in America, what would you say? Not just a coach and horses through the rhetoric gap. You could actually say a wagon train through the gap between what the two sides are saying.
Keith, we heard Treasury Secretary Timothy Geithner say earlier today that we are only in the early innings of the financial crisis in Europe. Do you agree with that? And what does that mean for your portfolio? How do you trade that?
Yeah, I mean, certainly when you look at, the mechanisms that need to change, there's a couple big ones. This EFSF, which is basically what the market's really whipping around on today. So Austria says no, the Germans say maybe, the French say yes. But the big problem here is time. So you're not going to get any clarity on the EFSF, which is the equivalent of a TARP type facility, which is what really Geithner's talking about. You need to TARP these banks, and if you don't TARP these banks, markets are going to go down. If you do TARP these banks, you're just kicking the can down the road.
And again, we should point out, the Austrians haven't said no to the bailout fund. They've just delayed the vote until October. But again, it just prolongs the agony here. So, Keith, what do you do in the meantime? What do you invest in here?
Well, our call since June is to own nothing European or U.S. equities. Most recently, we started to, dip our toes, if you will, into the more, consumer staples, healthcare, and utility sectors of the U.S., because the U.S. obviously doesn't have to go through this mega debate of he said, she said. But again, you need to have a big cash position. That's probably my highest conviction position right now to manage through all this.
And Louise, we are watching these European markets really surge into the close here. It's having a big impact on our markets. From your perch, what do you think is causing the trading today?
Well, first of all, I would caution on the conviction of this rally. If you look at the volumes traded in the CAC, the DAX and the FTSE, they're not huge. Also, some of the stocks driving the rally, like in the DAX, for example, auto stocks have been very strong, and they've been some of the most beaten up sectors over the last month. So to be honest, it's probably a bit of a short squeeze, a bit of a short covering. I don't think anybody on this trading floor here at BGC or even in the entire city of London will have great optimism ahead of this conference call. I mean, what is it? A conference call in 3 different languages with translators about something deeply technical and complex that, frankly, there is no solution. I sit here and I work through where are we going to go with this, and I can't find a solution. And the only solution I can find is people saying to me, well, it's okay, Louise, sovereign wealth funds will come and buy Europe. Well, frankly, if you're looking for the sovereign wealth and funds of, Abu Dhabi Investment Authority, KIA, and China's CIC to save Europe, then that kind of tells you we're all clutching at straws a little.
But, Louise, that is both scary and depressing. I mean, what do you do as a result of that outlook? Are you just hiding it in the mattress? I can't believe you're standing on a trading floor if that's the outlook.
Well, I mean, if you think about it, okay, so we look at Germany bailing out Greece. Greece clearly has too much debt. It needs to sort of halve the level of debt it has for a sustainable amount. That takes 170 billion roughly debt off Greece. That's equivalent to €2,000 per German man, woman, child and baby. Now, that's just Greece. What about all the other countries? You try selling that to the Irish. You try saying to the Irish who are going through deep pain at the moment, deep pain at the moment, massive pay cuts, huge austerity. You say to the Irish, we'll bail out Greece, but we won't bail out you. I tell you what, you try that, because that'll be a difficult sell. Germany can't bail out all these countries, clearly. But if it doesn't, then what's the scenario? Default? That will be messy.
Gee, it's been pleasant talking with both of you.